This episode is made possible by US Bank and Brex, the AI-powered spend platform.
Hi, this is Moran Shemesh, the CFO of Mobileye, and you're listening to CFO Thought Leader Podcast.
This is episode 1064.
I sort of say it this way. Most of our customers are not concerned if they're going to be attacked. They're being attacked every single day. If it's 9 a.m. Moscow time and they don't see the hackers hitting their network, they get worried because every day at 9 a.m. Moscow time, the hackers start attacking them. And if they don't see them, oh my gosh, where are they? Maybe they're in and we don't know. So that's the type of customers that we have today. And we're bringing that design pattern that those elite defenders use to what I call the mere mortals of the Global 2000.
Hi, it's Jack. On today's show, we speak with Russ Keefe, CFO of Corelight. Back in the mid-1990s, when Russ Keefe decided it was time for a career pivot, he got behind the wheel. With a Jeep packed full of his belongings, he drove from Washington, D.C. to San Francisco to explore fresh opportunities in Silicon Valley. Eager to drive business outcomes, Keefe immersed himself in the Valley tech culture, soon discovering a passion for FP&A and finance leadership. You'll hear about that journey and much more on today's episode. We'll begin after this. Have you heard about Brex? It's the world's smartest corporate card. Finance leaders love it because it's got powerful controls and rewards that help them make every dollar count. Here's why Brex cards are so smart. You can embed your expense policy inside the card. This lets you control employee spending before it even happens. Brex cards also automate manual expense, tasks like receipts, memos, and reviews. So you're free to focus on optimizing your company finances. Over 25,000 companies take every dollar further with Brex. Join them at brex.com/grow. Hello, we're speaking to Russ Keefe, CFO of Corelight. Russ, welcome.
Hey, Jack. Thanks for having me on. Really a pleasure. Appreciate it. Been a long-time listener. Really love the stories that I hear from a lot of the CFOs you've had on the podcast. So appreciate your time.
Well, that's nice to hear. Thank you for that. And so you probably know what I'm about to tell you, but we're going to ask you to look back, go back in time, identify for us some of those experiences that you feel prepared you to become a finance leader. What would those be?
For me, it really began when I packed up all my belongings at one point into my Jeep and I drove across the country from Washington, D.C. to San Francisco to start a new career in Silicon Valley. I was fortunate enough that I picked up my dad along the way, who joined me for this cross-country trek. I had been in D.C. I was working for the Securities and Exchange Commission, looking actually at the competitiveness of U.S. markets versus global competition like the New York Stock Exchange, the London Stock Exchange. This was in the sort of mid-90s. And at the time, the SEC and the Senate Finance Committee were very concerned that they might be losing a competitive edge in global capital market dominance that the U.S. had. The U.S. was always and still is very proud of that competitive dominance. It was really fantastic and interesting work, and in some ways, like a dream job out of college. I was so fortunate.
It's a wonderful kickoff there. Did you tell your father this is my plan? And he said, well, would you mind if I come along? Or was it not exactly like that?
I did tell him it was the plan.
And did he volunteer right away? Was he like,
Yeah,
okay, well,
he had just retired, and so it was
oh,
perfect
nice.
timing. So
Yeah.
I picked him up in Ohio along the way,
Yeah.
DC to San Francisco. You take Route 80 and drive right through Ohio, right through my hometown. Picked
Yeah.
him up, and he joined me. So it was also a fantastic opportunity to spend some real quality time with him.
Yeah, what a wonderful memory, I imagine, too. And you are sort of on your way to open a new chapter, and I won't interrupt you again, but where are you headed? What happens exactly?
Yeah. Well, the one thing is I was, again, super amazing opportunity to start at the SEC, right? It really was amazing. I was really grateful for a lot of the amazing mentors that I had there and the leadership. But what I found myself yearning for was something more, right? I really wanted to build something to help companies create new markets, new jobs. So, I sold my possessions. I packed up what I had in my Jeep, picked up my dad, and headed to Silicon Valley. I had a job with a newly public company doing SEC reporting, no surprise, as well as FP&A. And so this was really my first foray into FP&A. This was also in the late 1990s, 1996 specifically, and Netscape had just introduced the first public browser. So it really was like the Cambrian age of the internet. It was such a fantastic time to be there. And the lesson that I learned there really was, there are times in your career, particularly early on, that you really have to take some calculated risks. I gave up pretty much my, guaranteed for life job in the U.S. government to explore a new opportunity on the other side of the country. I didn't really know what I was getting into. I didn't know that much about the tech industry. I didn't know that much about being in California. I didn't have a big friend group there. So it really was sort of felt like I was taking a huge leap of faith to do this. And that's what I was like, before I made that decision, that was really sort of the wringing of the hands moment. Should I give up this really interesting and fulfilling job at the Securities and Exchange Commission to try something new? But I did, and it worked out really well. I'm excited that I made that change, both to be in California and to be part of what's gone on in California in the tech industry from, the start of the internet through today.
Can I ask, I said I wasn't going to interrupt you, and here I go. Before we turn the page on the SEC, though, what is your biggest takeaway from that period you were there? And I don't know if it was 2 or 3 years, but what was the takeaway for you? Again, it seems like you came with a certain amount of respect of what they were trying to accomplish. But what is the takeaway when you think back today? Is there anything?
Yeah, there's a few takeaways. One, I do really have a deep respect for the organization. There's about 3,000 people at the SEC, and they regulate, 10,000 public companies and 20,000, index funds and mutual funds. And so they are really worked hard and trying to do a great job. And then the other thing that I learned, which I still apply today, really is full disclosure, right? And I don't mean this just in a corporate 10K filing. I mean this in your job, in your every day when you're working on budgets, when you're working on different projects, full disclosure. And call out what assumptions you're making in models, right? Treat people like adults, treat people, and this goes very clearly like at the board level. You really want to disclose what's going on, sometimes the good, sometimes the bad, sometimes the ugly, right? But disclosure is really, you're shining a bright light, sometimes in the dark corners, and to do that, you really just have to be treating everyone around the table as the adults that they are. the investors that you're working with who are on your board or the other board members, they've seen it all before, right? This most likely isn't the first time they've heard, hey, we didn't make our sales numbers, right? This product launch that we had hoped was going to be, the next savior of the company isn't going as well as we had hoped. It's taking 6 months longer. The early customer feedback isn't what we wanted it to be. And really, making that a core part of who you are, because I think that's really critical for finance leaders, because that's actually what board members and investors are looking for from the finance leader. The person who's not afraid to raise their hand and tell it like it is. Now, you have to, obviously, there's ways that you have to do that, and you have to work with the CEO and the other people on the executive team, but you can't let them brush all the badness under the hood and just, it's all roses and flowers, right? You really do have to be thoughtful about how you disclose, and more disclosure is generally better than less. And that's particularly true for private companies. I think at times private companies, they try to, cover up some of the things that maybe aren't going as well as you'd hoped. And I find that to be a mistake, because it's oftentimes when you're disclosing, hey, this is going wrong. Have you seen, you ask this question to your board, we see this thing, it's going sideways. Have you seen this happen in other companies? What did they do? How did they right the ship? How did they correct and get back onto the path that they, had hoped to be on 6 months ago?
And we can jump to Silicon Valley. I want to point out that because of your SEC experience, clearly you landed on your feet in Silicon Valley fairly quickly, or clearly this role that you took on, SEC reporting and finance, you were the one qualified for sure.
Yeah, that's right. And it was a very interesting role. And what I learned when I was doing that is in SEC reporting, oftentimes what you're doing, you really are in some ways a historian, right? You're documenting what had already happened in the business. And so the interesting part about the job that I had, it was what I would call a small public company, right? $1 billion in market cap in today's terminology. So I also had a second part of that job, which was FP&A. And I really, really fell in love with that piece of the job, because that is all about the future. How do we allocate assets, investments in the company to try to drive the company forward? And I really, really enjoyed that part of it, much more than I actually enjoyed the SEC part. The SEC part was an entryway. The FP&A part was where I really became passionate about the career in finance, helping business leaders understand their business more clearly.
It seems like already you have your mind made up during this early stage that your path will be finance. Is that true, or do you think it was not as straightforward as that?
Yeah. By that point, by the time I had come to Silicon Valley, that was already my mindset. I had actually graduated with a degree in economics. And my first job in DC was actually as an economist for the Bureau of Labor Statistics, where I actually worked on helping calculate a piece of inflation. And I learned quickly that wasn't my passion. And then I jumped to the SEC, and then from the SEC to
and interesting. You indicated again, it's sort of the mid '90s, but we're about to enter the .com era. It seems like you were someone with job security during the .com era. I think you were at a company for a stretch over the implosion and what have you, but you're observing it up close. I don't know if the company, I don't think it was a .com you were with. Can you share with us how you weathered the storm there and what your impressions were at the time? Because I'm certain there were opportunities to go to .coms. You did.
That's right. I still had a little bit of the conservatism of saying like, hey, I already made a huge leap of letting go my government job. I was working at a relatively stable company called Advent Software. It was a fantastic firm. They're still around today. They primarily are selling into banks and hedge funds and whatnot. Accounting and trading platform is what they specialized in. And so all things relative, they weathered the dot-com bust relatively well. That said, it was a very tough time. We had gone from making our quarterly earnings numbers like 20 quarters in a row to Wall Street. We were a public company, to then going through and growing from 1,000 to 4,000 people, to then doing 4 rounds of layoffs, which was relatively, hand-wringing. The first round of layoffs at any company, while unfortunate, tends not to be that drastic, particularly if there's been a lot of growth, right? You've mishired in places, it's typically not that hard of a path to be on. The second, third, fourth round of layoffs, you're cutting bone. You know that managers are letting go people who are really high caliber professionals who are great at their job and are just in an unfortunate situation. So that was a real challenge in time, not only in my professional career, but also in my personal life. I would say about a third of my friends who were in Silicon Valley all moved away. They lost their jobs. They moved back to their hometown or to a different place, right? Because Silicon Valley is a relatively expensive place to be, and you need to be well employed to,
Yeah, that's a great detail for us. We don't always think about the bigger picture about your life as it goes on around these economic developments. You were there from 97. I just want to point this out too, because you were there on the way up too. I mean, there must have been a lot of excitement for years, growth, and then you were there for these layoffs, as you just described to us. I also want to share your titles during those years. You were a manager of finance. You were a manager of sales operations for a while, which is also an interesting role. You're getting more in the operations side. You're not just stuck in the accounting side. Am I right about that, or how did you look at it?
That's right. That is another nuance of my career. Is I've in the FP&A world, I got very interested in the go-to-market side of the business. So in that role, I was doing things, designing compensation plans for the sales teams, designing incentive comp for people who are near the sales teams. And then I had the opportunity at Advent to take over the sales operations role, which was fantastic, really getting into the operations of the business. And I'll tell you a little bit more about that later, because I think it's really important for people to have a broad range of experience.
You're making some investment of years with these companies. I'll point out, I always like to do. I mean, it was like 6 years at Advent, and you move on to a company called Riverbed Technology. I remember it's still around, I'm sure. But it's for a 4-year investment, and you're getting more senior titles as you go along. So we're led to believe that it's you're just following an easy stretch one after another. I'm sure it's there's more to it than that, though. Can you tell us how do you feel? Are you feeling comfortable about your trajectory during those years? Are you getting the experiences you hope for?
Yeah, well, like I talked about at Advent, we did rounds of layoffs. It was really, really challenging at a time. And then the jump to Riverbed was actually super interesting for me because up to that point in my time in Silicon Valley, I'd worked for public companies, usually small to medium-sized public companies. Advent was public. The company before that was public. Riverbed was the very first startup I joined. I thought that was, again, I'm taking a huge risk. I'm joining this startup that's, at the time, I think it was 20 people when I joined. I literally joined there in sales operations. I processed the very first order that they ever had. The Canadian Wildlife and Fisheries was the very first order, very first product that Riverbed ever sold. And wow, that felt like a big risk to me. And what a wonderful experience there. We went from a startup, 4 years later, we did an IPO. we were doubling not every year, but every quarter for eight quarters in a row or 9 quarters in a row, and then substantial growth after that. So we went from zero revenue to 400 million in 4 years. So that was a fantastic learning experience. I'm very thankful that I did it at the time when I was single without a family. It took, it was one of those times when you're making the conscious decision to invest in your career, right? I worked many hours in those days, but you could see the tremendous growth of the company. I went from being an individual contributor to having significant teams under me. I ran sales ops, and then I started to run finance. I was the first person that worked under the CFO and built out the finance org, helped them through that IPO process, where once again, I was able to call back on my experience at the SEC when we were doing our S1. I was on the disclosure committee for Riverbed, and really just going through that IPO process with your hands on the steering wheel was
now be
really,
honest
really
with us
fun.
now. When you saw the working closely with the CFO as you were, is that a job you wanted? Did you think, oh yeah, someday maybe? Or I mean, what were your first impressions of the CFO role now that you're seeing it up close, really?
Right. Yeah, it was absolutely something that at that time I had already aspired to be doing. Yeah. I had the great opportunity at the job before at Advent. I worked for a CFO whose name was Graham Smith. Graham became more known because he left Advent and became the early CFO of Salesforce.com. And was the Salesforce.com CFO for 15 years from, call it, 2000 to 2015. And he was another fantastic mentor who really, made me interested in the role. And then at Riverbed, I worked for a great CFO, Randy Gottfried, who was also a fantastic mentor, much like Graham, who was really helping me grow in my career. And part of the draw to me was, wow, it's really interesting and fun to be mentoring. And there I was on the receiving end of the mentorship. But as I began to grow teams, sort of being able to share my experiences with people who were earlier in their career development than I was. And so that part of it really, really intrigued me. And so at the time, I really was interested and really had my, sights set on becoming the CFO.
Are you still, though, more of an operations executive than the, FP&A, top FP&A individual? Sometimes you find a blend of finance and operations that are rather senior roles as these go-to-market strategies mature. It demands somebody very knowledgeable about finance. Where are you?
Yeah. I would say that's where I was at Riverbed, where I was very, because I had run sales operations there, and then moved into the finance role. So I was doing a bit of both. I still maintain that. I still love the operations piece. Now at Corelight, where I am now, I definitely am the CFO. I lead rounds of financings, and, we recently did a tender offer. So I was at the tip of the spear there, things that you really associate with the finance sort of organization. But it is true today, even, that sales operations and other and logistical operations, supply chain management all roll up to me. So I still maintain a fair amount of operational responsibility within the company. But the focus on finance is still, I would say 70% of my job. And I've been very fortunate to have fantastic team members in those roles that I rely on.
Well,
today.
we kind of jumped over. There's a couple of chapters there where you advance into the most senior ranks. But just as you just mentioned, Corelight, I think we need to tell the audience about Corelight, and we'll come back and we'll a little later ask you some more career-related questions. Is that all right?
Yeah, that's fantastic. No, I'm happy to tell you a little bit about it. Corelight is the leading sort of cybersecurity company that is driving AI and machine learning to power network detection and response to help protect actually the world's most critical data. Our roots started in the National Lab System, where our founders created a powerful open source tool to help protect not only the entire U.S. National Lab System, but the Department of Energy. And over time, these tools have been recognized and adopted by elite defenders throughout the U.S. government, the Five Eyes, NATO, other U.S. allies, and that has eventually gone into large financials, critical infrastructure, technology, manufacturing, and it really has given Corelight access to customers that most startups could only really dream of having. And these entities really are protecting the world's most critical data. I sort of say it this way: most of our customers are not concerned if they're going to be attacked; they're being attacked every single day. If it's 9 a.m. Moscow time and they don't see the hackers hitting their network, they get worried, because every day at 9 a.m. Moscow time, the hackers start attacking them. And if they don't see them, oh my gosh, where are they? Maybe they're in and we don't know. So that's the type of customers that we have today. And we're bringing that design pattern that those elite defenders use to what I call the mere mortals of the Global 2000.
You mentioned the founders. How old a company is this then?
Yeah. We're Corelight as an entity has been around for about 8 years. The open source is about 25 years old. So we're an open core, what they call an open core company. So we're putting enterprise wrappers around a set of open source technologies that these elite defenders use to help protect themselves.
A lot's happened in this space. If we want to just look at cybersecurity, can you help us understand better where you are in the vast ecosystem of cybersecurity? I mean, how do you distinguish yourself from so much of what's out there being offered to customers?
Yeah. So, like you said, we are network detection and response. So we track network data, and we actually act as like a flight recorder for network data. And we are sort of provide the Goldilocks level of data. There's some different technologies. One that called PCAP that captures every single thing that goes across the network. And the analogy would be like, hey, it's like, oh, there was a plane crash, right? And so you get data that is like every single conversation that happened on the plane, a lot of that actually isn't useful, right? And then there's other tools like RSA Net Witness, who might be the equivalent of like, okay, the plane took off at 9:10 and then it crashed at 10:10. Right? And that's not enough data. And we're sort of like that flight data recorder set of data for these threat hunters and incident responders that gives them just the right amount of data to help go after and solve the incidents that they're running across. I'll give you a great example is, we recently had a customer who unfortunately was breached, and there was a $10 million ransomware demand. And thanks to the power of Corelight data, they were confident in their ability to say no to that ransomware actor, because with the power of Corelight, they were able to determine that the perpetrators hadn't taken, all of their, customer data and whatnot. They had actually extracted very, very little data, and they were able to turn down that ransomware request.
I like that. flight recorder analogy. I find that helpful. Thank you for that. So tell us a little bit about, and you mentioned raising money, and I think you've raised some funds here over the time you've been there in tenure. Can you just give us maybe an abbreviated history as to where you are with the capital structure?
Yeah, absolutely. We've had the good fortune of attracting and working with some of the leading venture capital firms in Silicon Valley. Actually, one of the ways I discovered Corelight was the lead investor for the Series A from Excel Partners had been the chief product officer at Riverbed. So I had worked with him in the past. He led the Series A. That was fantastic. We did a Series B with General Catalyst, which is another well-known firm. The Series C was led by a group called Insight Partners, which is a leading venture capital firm out of New York City. We did a Series D that was a group called Energy Impact Partners, who's super interesting because they sort of have a dual mission. Most of their limited partners, where they get their money, are utility firms and the like, and critical infrastructure. So their mission is to help those companies discover new technologies as well as make a return for them. So CrowdStrike also participated in that round. One of the leading cyber firms out there is invested in us. And then we most recently completed our Series E, which was led again by Excel, but their later stage fund with participation from CrowdStrike as well as Cisco. So, we really do partner with the largest companies out there to help bring these defensive techniques that these elite defenders are using to, again, the mere mortals of the Global 2000.
I'm curious, how do you look at this chapter that you're now driving forward into? What is this? What type of growth chapter is this?
Yeah, we're continuing on a very rapid growth. We're, getting very close to sort of the $100 million mark in terms of ARR. The last round of fundraising that we did, we believe, is likely the last round that we'll quote unquote need to achieve cash flow break even. So it has been a wonderful experience because in some ways we feel somewhat liberated from the fundraising sort of cycle. We don't have to worry about optimizing for that next fundraise. And the one piece of advice that I would give to people as they begin the journey that we took here was not to necessarily try to optimize your valuation at any one particular point in time. You quote unquote leave a little money on the table so everyone can make money along the way, recognizing that it's only a milestone in the journey when you close a Series B or a Series C. That's just another stepping stone on what is eventually, hopefully, a path to an IPO or another meaningful exit. And that served us really well, particularly in this environment where you saw multiples contract so much in the last, 3-4 years. Having not optimized and pushed valuation as being the only metric we cared about when we were doing fundraising really served us well, because we didn't have to go and do a down round. We didn't have to grow into the valuation and contract our ability to invest in growth. We are actually able to continue to invest in growth because we really looked for a reasonable valuation and fantastic investors who can help drive the business forward.
Yeah. Well, how did you reveal to them the opportunity? What is the metrics or the numbers that really over the last few years have guided you and you were able to use to educate those investors in the market?
Yeah, that's a great question. We really do focus on all the key, SaaS metrics. Annual recurring revenue, ARR, what is the ARR growth rate? What's your new logo acquisition, net dollar retention, gross dollar retention? Those are all key focuses. And given the type of customers that we had, those numbers looked really good. We have fantastic, for example, net dollar retentions because we're selling into large organizations. Oftentimes they'll start out with a pilot that is $500,000. And when you're selling into a JP Morgan or a Deutsche Bank or that flavor of customers, these people can be $5 million a year accounts, right? So we would land with a few $100,000 and then expand to 7-figure ARR customer arrangements over time, which made net dollar retention really fantastic. We also had really great gross dollar retention. Now, what I'll tell you about that is it's kind of a lagging indicator. And I really encourage folks also to focus on other non-financial metrics like net promoter score. For example, at Corelight, our net promoter scores in the mid 60s. That is a fantastic net promoter score. And what it highlights is really a keen and laser focus on customer satisfaction, bringing these big customers on, making sure they're utilizing the product, making sure they're, satisfied, making sure that they continue to see value from it. I would really focus on those type of metrics. How many customer support cases are being registered? How is the product utilization going? Is it increasing? Is it decreasing? Why? If customer support cases are decreasing, wow, what's driving that? And let's invest in that and let's do more of that. If product utilization is going up, why is that happening? And can we invest to continue that trend? And many of those are much more leading indicators and will drive then the financial indicators, which is sometimes where I think CFOs maybe focus a little bit too much on and not enough on the product, KPIs.
Sort of what you described for us, where there's always a pilot originally that's minor in scale, but the opportunity that could follow it could be quite grand and sizable. It would seem that suddenly you would have to, hire and put in place many people once you succeed, once the pilot succeeds. It's a blessing and a curse. The investment required to support what the customer now wants. Is that part of the challenge here? I mean, it seems to me like you would have to quickly be ready to accelerate or grow the organization in some way.
Yeah, absolutely. That is part of the challenge. And it's one of the things we focused on very early on when we were building the company to try to make it resilient so that we could scale quickly as we needed. Some of that involved, hiring relatively seasoned people like myself to lead senior roles. As I said, I joined when we were Series A. There were a number of other people around Corelight who had roles at companies like Riverbed and had scaled them from zero to an IPO. And we were fortunate enough to have them here at Corelight. I'll use another example of Brian Dye, who's our CEO. He ran multi-billion-dollar units at Symantec and McAfee before coming to Corelight. And then him and I always joke because we started around the same time. And at one point in time, we were literally putting the furniture together in the office. And so you have to have senior people who are willing to roll up their sleeves and do the dirty work, do the heavy lifting, but then also have the skills and capabilities and background to scale the company to be a multi-million-dollar ARR type of company.
Could you share with us, was there ever a particular metric that your finance team or you discovered had been overlooked or the organization needed to be educated differently about?
Yeah, that's a great question. And I think as we began to scale up, obviously net promoter score was really important. Gross dollar retention was another one that was very important for us early on, really, because that's showing you, a year ago, the customers were spending $100 with us. This year, they're spending $130. If you can make that a true statement, that's fantastic. And that one really shows not only are your customers renewing, but they're also expanding their deployments. And that really is a great one. And then as we began to scale up, sort of Series C and beyond, there's another one that, we began to look at, which is called a burn to NAR ratio. Like how many dollars do I have to, lose? In other words, do I have to burn to add incremental ARR? That's the NAR. It's really incremental ARR. And is it $1 to one? And this is like in the go-go days when it was all about revenue growth, companies were burning $4 to get $1 of ARR, right? Well, during the recent corrections, that quickly shifted, right? And so now you couldn't do that anymore, unless maybe you're a very fortunate AI company. But you couldn't really do that anymore. And so educating mostly the executive team on what burn to NAR is, it's probably one that's a little bit too much for maybe, a company town hall or all hands conversation. But for the executive team, it was a critical number that we really focused on, because it really is a measure of efficiency in growth. It's the combination of growth and efficiency together.
Want to just touch quickly on AI with you. Is this every company now is telling us that AI, it has an advantage, a strategic advantage via AI. Does Corelight?
Absolutely. There's quite a bit we do on the product side in terms of AI, machine learning, and leveraging LLMs on the product side. That has really been one of the key things we do. I talked about the flight data recorders. We provide just the Goldilocks of data. And the key thing with any AI, LLM, or machine learning is the quality of the data going in really, really matters when you talk about what's the quality of the AI coming out, right? So we leverage it quite extensively on the product side. We also leverage AI a lot internally as well to improve operations and streamline business processes. And I think that's mostly where the CFOs play a role. For example, we use AI tools like Clary to help forecast new customer acquisition and churn risk. We're using AI tools to assist with customer success and technical support. My team is currently running an experiment with in legal with AI. We're working with a small company that has built an LLM where you can upload your standard contract templates. And then as customers mark up your contracts or send you their contracts, you can run them against this LLM, and it will actually tell you, hey, what parts of this contract are market or not market, and really can speed up the review process. We're also using AI for responding to RFPs, which is, large companies, when they do new procurements, often do RFPs or RFQs, requests for product, or requests for proposals. And we've been using an AI tool there. Oftentimes these things are, 50, 60, 70 questions. They're always the same questions asked slightly differently. And the AI tools have taken us from it taking 2 weeks sometimes to fill these things out, because they're very detailed. In cybersecurity, they're very security oriented. Now it takes us 2 days to fill one out. The AI tool will fill out all of the questions. There'll be a few blanks, and then you do need a human to go through and read it, but they're starting with essentially the test is already filled out. I'm just fine tuning that.
Yep. Excellent. Well, thank you for that detail. We'll move to our finance strategic moment question. Aha moment, sometimes it's called. Anything come to mind when we ask for a finance strategic moment?
Yeah, absolutely. And for me, if you'll give me a little latitude, it's not so much a particular moment, but really a mindset that has evolved for me throughout my career. And the most important, advice I give to finance leaders and aspiring finance leaders is to have the mindset of a business person whose expertise happens to be finance. So really a business person whose expertise happens to be finance. And by the way, I give this same advice to folks on my team who are in legal. Be a business person who happens to be a legal expert or in operations or logistics. And I'd really highlight both parts of that, of business and person. On the business side, really focus on the business and be curious about it. What lies behind the numbers? What drives the business forward? Why are the customers buying? What's the competitive advantage? You have to really be curious. What in the market is changing? What might change in the future? What are your competitors going to do? You have to, particularly early in your career, ask a lot of questions. And then listen. I'd also encourage people, do your homework when you're starting a new job, really make sure you're understanding and studying any research reports out there. Look at competitors or comparable companies' earnings releases. What are the banker notes on them? Learn as much as you can about the market and adjacent markets. And most importantly, what is driving your business today?
Are you tired of manual, fragmented, and time-consuming expense management processes? Then the U.S. Bank Commercial Rewards Card might be right for your business. More than just a card, it's an all-in-one card, expense, and travel management solution that replaces outdated expense management methods with a single intuitive platform. Specifically designed to scale with your growing business, it provides the control and real-time insights into spend that you need. It integrates with your existing tools, lets you set custom spend policies, captures all expenses automatically, and liability is kept at the corporate level. Employees can even book travel right in the platform. You also get to choose your rewards, either points or rebates, all while saving money with no annual fee. So why wait? Manage your cash flow better and streamline your business operations today with the U.S. Bank Commercial Rewards Card. Visit usbank.com/CFO to learn more.
Again, I should mention to the listeners that I think this is your third CFO tour of duty. So you've had 3 CFO career chapters. Again, you were observing CFOs up and close for a fair part of your career. But when you got there must have been something you wish someone had told you, or something about the job. If you could go back in time and give yourself a piece of advice, what would that be?
Yeah. One of the things is really in finance in general, it's really to be a human, to be a person. I think finance folks get a bad rap as being like business automatons in some way. Very early in my career, I actually dated a woman who was an obstetrician who specialized in delivering high-risk pregnancies. And she didn't always have good days. And that was truly tragic. And what that made me realize is to take myself a little bit less seriously, right? Not to ignore, what our fiduciary responsibilities are, but really to be a little bit more human. For example, early in my career as a manager of FP&A, I used to take jelly beans with me around to all my finance meetings and my forecast meetings, my budget versus actual meetings, because I realized that many of the managers that I was going to see, they dreaded the finance meeting. To them, it was a trip to the dentist, right? They were worried that they were being judged, and they really dreaded it. And I wanted to build a relationship with them where I wasn't here to keep score and to judge. I really, truly wanted to help you grow your business and at times be an advocate for you. I wanted them to, where we found wins and we were able to make investments and really drive the business forward. I wanted them to get credit for that, not finance. And I really still keep that in mind today as I've become a little bit more senior. I've also realized that it's important to connect with people at a human level to make them more comfortable in those meetings with me. get to know them, ask them about their weekend, their kids, crack a joke, be self-deprecating. And then you get to the hard stuff, right? Because then you've sort of allowed people to know that there is a human on the other end, and you're not just there to sort of, grade them and keep score.
Russ, we always like to ask our guests to reflect a little on the personal side. We're wondering if there's, and you've been at Corelight for a period of years now, so people must think they know who Russ Keefe is, but tell us something about yourself they might not know.
Oh, that's a great question. I as you've seen here, I'm pretty much an open book, and we talked about it at the top of the podcast of like, hey, disclosure is a great thing. So I'm not sure if I can really come up with too much that people would be surprised to know about me. One of the things I think of is just my deep passion for my family and spending a lot of time with my son and playing baseball and all of that sort of stuff. So
what, I got to come back to the car ride across country, which we kicked off really with. I mean, what lured you out there? Was it just an adventure? Be honest with yourself. What were you thinking? You were about to open a whole new, you were on the East Coast, you came from the Midwest. What were you thinking? What was this going to be?
Yeah, in some ways, I was just seeking adventure, seeking a change. I'd been working for the government for about 4 years. I realized that I didn't want to do that for the rest of my life. Was looking at what would that next chapter be. I was drawn in many ways to the Bay Area, not only for the technology scene, but also for all of the amazing elements that the Bay Area has. I had a few friends who were out here. I would come and visit, and we'd go skiing in Lake Tahoe. We'd go do bike rides around wine country. We'd go see art exhibits in San Francisco.
Would that person in their 20s be surprised to learn that he's still there on the West Coast? You're still there.
I think he'd be surprised. I think I was like, I'm just going to go try this. I'll see if it works. If it doesn't, maybe I'll go back to Ohio or move back to DC. And, for me, it really was an experiment, and I'll see if it works. And here I am 20 plus years later, with firm roots in Silicon Valley.
Well, great story for us. Thank you. Hey, would you have a book recommendation? Doesn't have to be a business book, or is there something that influenced your thinking along the way? Whether, might have been some other resource that you have?
Yeah. There's a couple, and there's three that I have in mind. Like two are cybersecurity books, and people on my team, if they listen, will laugh. One is called The Cuckoo's Egg. And when I joined Corelight, it was the first cyber company I worked for. And so I wanted to learn about it. And The Cuckoo's Egg is actually a story about the very first cyber attack ever recorded. And it was against the National Lab System, which is where Corelight was, the foundational open source that we're based on was born. And it's a super interesting read to just hear about cybersecurity if you're interested in that. There's a more modern version called The Perfect Weapon, which is a more recent book on cybersecurity, and talks about a lot of the just really interesting things that are going. There's a particular chapter in there called The Original Sin, which talks about, when the Israeli cyber forces caused the Iranian nuclear centrifuges to spin, causing them great damage. And the reason it was titled The Original Sin is it was the first time that cyber warfare had actually manifested itself in physical damage to infrastructure. So that's super interesting for people who are curious about the world of cyber. On the personal side, I've been reading spy novels recently. I'm currently reading a Perfect Spy, which the author has written a bunch of books. A couple have been made into movies: Tinker Tailor Soldier Spy, John le Carré.
Yeah.
So
excellent. Well, thank you. Great choices for us. Thank you for those. We are up to our final question. We've kept you with a few extra questions here, so I'm sorry for the time, but Let's find out what your priorities are as a CFO for the coming 12 months. What would those be?
Yeah, that's a great question. The priorities for the coming 12 months, really boil down to a few things. Three things specifically. One is to continue to drive growth and customer acquisition for us. We've recently rolled out a new product that is allowing us to bring the technology used by these very elite defenders to the mere mortals of the Global 2000. And what I mean by that is a lot of our customers today don't have, they have 800-900 people in their security operations and cyber teams. And what we want to do is be able to bring these tools to people who have, 20 people, 10 people, 6 people in their security teams. Because what we're seeing is the nation state actors and the criminal elements that revolve around those nation state actors, which is really, I'm employed by the Russian government to hack by day. I close my computer, I walk out to the cafe, meet my buddies, and now I'm hacking at night using the same tools to make money for myself. And so these tools and resources are being used against hospitals and things like that. And so really bringing the tools that, the U.S. Department of Defense is using to a hospital is really part of our mission. And with that, to really continue to drive growth for the company and growth for our employees. Those are really the things that we've focused on, is the mission for the customers, growth for the company, and growth for our employees.
Russ Keefe, thank you for joining us on CFO Thought Leader.
Thank you so much for having me. It was my pleasure.
Hello, everyone. Jack here. Hope you've been enjoying our recent episodes of CFO Thought Leader. Please know that I don't take for granted this opportunity to serve you. Your time is valuable, and of course, so is the time of our CFO guests. I'll admit to you on certain weeks, I will pinch myself and say, hey, I get to do this for a living. I speak to all these impressive leaders. Undoubtedly, there are more aggressive interviewers out there, some who leave no stone unturned. But our swim lane is for finance leaders only. And those finance leaders have a unique style of leadership, one that is rooted in the burden of trust. In light of this, finance leaders must take great care not to forfeit this trust as they step into the role of being a more expressive leader. And that is what CFO Thought Leader is really about. That's why I try to remind myself week in, week out, how fortunate I am. Still, I need your help. Tell us what we're doing right. Tell us what we're doing wrong. Email me your comments at jack@cfothoughtleader.com. And please visit cfothoughtleader.com. You'll find a listener survey right on the nav bar. As always, thank you for listening.